Coming up on the SBS On The Money podcast, we take a look at the opportunities for Australians in Southeast Asia, a closer look at the interest rate outlook, and shares of CSL and Wisetech smashed today. We'll tell you why and more next. Hi everyone, welcome to the SBS On The Money podcast for this Tuesday, the 28th of October 2025. It's a day where the Australian share market fell, the S&P ASX 200 down 0.5% to 9,012, particularly CSL and Wisetech, the main reason why the index tumbled. We'll tell you the details with Mike Jenneke from UBS in a few moments. But first, the global trade war has accelerated a desire among Southeast Asian leaders to work with their neighbours. That's the assessment from Australia's special envoy to the region, Nicholas Moore, in Malaysia for the ASEAN summit. He says there's already been $2 billion worth of Australian investment into the region by businesses and institutions over the past year, while two-way trade has stepped up by $6 billion. Mr. Moore's earlier report for the government found potential trade worth more than $500 billion by 2040. For more, I spoke with Mr. Moore, who was in Kuala Lumpur. So, Nicholas, you're in Malaysia for ASEAN. How receptive is the region to working with Australian businesses, and what kind of dialogue have you had?
Very receptive, I think, in short. When we started the process, we went out and I met and the team met with about 2,000 different leaders, business leaders and others around the region and in Australia. And what came back was a very positive message in terms of the potential people saw from the relationship. Now, that was up to 3 years ago. Since that time, we've been working, developing the strategy, in the last 2 years, implementing it. And that enthusiasm continues. And certainly what we've seen over the last few days reinforces it. There's a lot of support coming through from business and from the governments of the region as well.
You authored Australia's Southeast Asia Economic Strategy to 2040 report. It was released before Trump's second presidency. How has the risk profile of that strategy changed given the trade war?
The focus on it was diversification of Australia's trade and investment. And Australia has a very strong trading relationship with the region. It's our second largest trading partner. What we saw with COVID, which preceded the report, was the dislocation that had taken place. And everyone in the world was looking for ways to diversify both their supplies of imports and their markets for their exports. Now, Australia was no different. And Southeast Asia was a good partner for us, both in terms of exports and imports, and also a potential source of capital and a place where our capital was going to as well. Now, all of that is reinforced, by what we're seeing in terms of the uncertainty, in terms of the global trading regime. So everything that we were dealing with then is relevant, more relevant today.
So the trade war, is it hindering or benefiting our economic opportunities with the region?
Everybody in the region is focused on more trade. They were when we started the report, but certainly now this idea of diversification is very much in everybody's mind as a key requirement. We're seeing lots of steps being taken between the countries of the region and also outside the region.
Your report grouped 4 key recommendations, and for the benefit of our audience that don't know, raising awareness, remove blockages, build capability and deepen investment, given that investment is underweight to Australia's competitors. Now that the Prime Minister launched 2 major investments worth more than $200 million yesterday, which he says was something that arose from your report, are you happy with the progress being made and its speed? And where do you think there needs to be more of a focus?
Yeah, I think we're very happy. I mean, we've got short-term wins. So our two-way trade has stepped up $6 billion since the report. So that's a lot of jobs and a lot of opportunity for Australians. As well as that, we've had $2 billion worth of investment in the region from Australian businesses and institutions. So that's a good short-term wins. But the report is very much about the long term. Now, we've had a long-term relationship with ASEAN, as you mentioned earlier, 50 years more than 50 years now, 51 years as a dialogue partner. Now we're looking to deepen that going forward, and the recommendations in the report put in place a very strong architecture to build that going forward. As you mentioned, raising awareness within the region and within Australia of what the opportunities are. We're seeing 500 business leaders travel from Australia to the region to look at specific opportunities as part of the trade missions. We've got the business champions that have been appointed across the region. Here in Malaysia, we've got Tony Lombardo from Lend-Lease, very active over the last few days, talking about the opportunities to Australian businesses. And indeed, we have an Australian business delegation with us today in Kuala Lumpur. So raising awareness is taking place, removing blockages. We had an update of the Australian ASEAN Free Trade Agreement in March that updated it and removed barriers. We've also building on the capabilities. One of the things we've seen here this week is a group of young scholars from the Australian ASEAN Centre that's been set up in Canberra, who are here in Kuala Lumpur, Australians and young people from the region, all working on various different projects, building that capability. And finally, as you mentioned, Richard, in terms of the deepening investment, we had the $2 billion EFA facility the government announced, and it's being utilised now. And that was, you mentioned, two announcements in terms of two funds who will be receiving capital from the Commonwealth Government. They'll be matching that with capital from Australian and international investors, and that will be going into businesses and investments in the region, many of which will be funded as well. So you're getting multi-layers of impact in terms of that investment the government is making.
Three final questions. In the current global climate, which of the top priority sectors do you believe present the strongest immediate opportunity? And is there perhaps a sweet spot when you're looking geographically?
Well, I think it's important to say that the region is very different. We have in Singapore one of the richest per capita income countries in the world. And of course, we've had Timor-Leste just join ASEAN, who's at the other end of the spectrum. So you've got highly industrialized countries, you've got countries industrializing, you've got agricultural opportunities, you've got mining opportunities. So we identified in our report 10 different areas to focus on, and they match most of the countries in the region's priorities. So energy, of course, very important, particularly with the decarbonisation agenda that has been brought into by all the different countries of the region. So that's a very important focus going forward. Critical minerals obviously has had a lot of discussion in Australia, but also in the region. And when you think about critical minerals, obviously some of our critical minerals, lithium with Lynas, is being processed in Malaysia in the region as well. In terms of high-tech investments, Australian companies are active in the region. Cochlear and ResMed have operations again here in Malaysia and in Singapore as well. So there is from across the spectrum, there's lots of opportunities. The final one to mention is digital. The digital economy is a huge focus for everyone in the region. The government has set up 3 landing pads across the region to allow small digital startup companies to set up operations here to take their knowledge and their technology to the market. So Ho Chi Minh, Jakarta and Singapore. Now 160 Australian companies have actually made use of that to actually take their businesses from Australia to investigate the region and how they can further develop it. So digital, very big focus for Australia, very big need in the region, but many others as well, across the whole spectrum.
And finally, in wrapping up, what's your message to the government, considering what you said was that this is a long-term plan to build this relationship with Southeast Asia? And secondly, what's your message to business looking to take advantage of this relationship?
Well, in terms of business, it is a great opportunity. The market here is growing faster than virtually anywhere else in the world. The world is struggling with growth at the moment. This region is growing rapidly. It's got strong demographics. It's got 200 million people in the middle class rapidly emerging. There are opportunities for all businesses across the region. So certainly we should be looking at it. It has been underdone for Australian businesses. We have the best, most globally competitive businesses in the world in Australia, but our focus traditionally has always been to look at North America, particularly the United States, and Europe, particularly in the United Kingdom. Now's the time really to be focusing on the opportunities on our doorstep. For the government, my advice is simply just keep on supporting this initiative. It is a government initiative. The government has launched it. The government has supported it. The government has reported back annually at this ASEAN conference, advising the progress that's been made. And it's a tremendous thing to see government getting behind it. We made 75 different recommendations. Of those 75 recommendations, 50 have been acted upon. That really shows commitment from the government to the region and to growing two-way trade and investment between Australia and the region.
That's Nicholas Moore there, the special envoy to Southeast Asia. Let's now take a close look at the Australian share market. The S&P ASX 200 down today by 0.5%, 9,012. But two stocks really the bulk of the reason why the share market fell today. The first one, CSL, plunging 16%. Remember, it's one of our biggest companies on the market. The company revised down its revenue forecast because of lower than expected US vaccination rates. The demerger of its Seqirus business has been delayed as a result, and shares in the blood products maker have now fallen 36% so far this year, prompting a bit of shareholder anger at its AGM today. Management, though, surviving a spill of the board despite a significant protest vote against its executive pay report. The other one, the biggest loser on the ASX today, Wisetech, down 16%. The software company revealing AFP and ASIC officers executed a search warrant at its Sydney office yesterday as part of an ongoing investigation relating to alleged trading in Wisetech shares by co-founder Richard White and 3 employees. In an ASX statement, Wisetech noted no charges have been laid against any person and no allegations made against the company, and it intends to fully cooperate with the investigation. So for more on the day's market action, I spoke with Mike Jenneke from UBS Wealth Management. He is the head of Australian equities there. Mike, first of all, the ASX is down today. Why?
The ASX declined today for two primary reasons. First, there was some profit taking in the mining sector, particularly in the gold miners, due to a recent correction in the gold price. And then there was also some negative stock-specific news in CSL and Wisetech that led to significant declines in their share prices. And these two companies are pretty large, high-profile stocks, and that performance spilled into the market generally.
Okay, the market, though, is still at near record levels. To what extent do you think investors are now looking to a potential of a US-China trade deal?
Yes, the investors are looking towards that being resolved more constructively. How it plays out is that it removes the escalation risk and creates more certainty in the trade policy environment. And really what's been driving the ASX has been a constructive macro environment where we've had resilient economic growth both domestically and in many other parts of the world, and we've had easing monetary policy as inflation rates have declined. So the US-China trade situation was a potential threat to that, and that improving is reinforcing those positive trends.
Yeah, so can you go through some of the potential fallout from a potential deal with the US and China? Because what we've seen recently on the share market is this pretty strong run-up of things like rare earths. We've seen gold. There was this huge gold rush a few weeks ago as well, to the point where people were physically lining up for physical gold bars at Martin Place. How's all of this unfolding, and what's your take?
Well, in terms of how it plays out on the share market, we're seeing broad outperformance of the mining sector really over since the middle of the year. And there's been some recent strength in commodity prices, which has exceeded investor expectations. And those expectations were quite low because there was concern on a potential trade demand shock, which is proving to be too pessimistic. So the mining sector is really where it's being reflected. Clearly, areas of strategic significance, such as rare earths, have performed very strongly, but do look like they've overshot the long-term upside in the near term. But in general, we see mining as attractive to investors. As far as gold is concerned, there's been very strong momentum in recent weeks due to a short-term acceleration in investment demand. The case for investing in gold as a diversifier from traditional assets has been pretty sound, but there's been talk of a currency debasement trade recently, and that seemed premature, which was because it was not being reflected in other asset markets such as long-term bonds. So gold as well overshot, and there's been a correction to that as it was overbought, and there's been some waning of investment demand.
I guess the other key events happening this week are a number of central bank meetings around the world. The biggest one, the US Fed this week. We've got the Australian Reserve Bank meeting next week, CPI numbers out tomorrow. What's the market expecting in terms of the move for lower interest rates, both globally and here in Australia?
The market is priced for a 25 basis point cut this week for US rates, and an additional cut is actually also expected in December. Australia is probably more 50-50 probability on a rate cut. There were some hawkish comments from the RBA governor yesterday, which led to some uncertainty on the exact path, but nevertheless, we're only really expecting one further cut in Australia, and the question is on the timing. As far as the impact of lower rates on financial markets, it's already really been felt. It's flowed into the buoyancy in equity markets that we've seen. So it's largely within investor expectations, and so from here, it's really the impact on the real economy that we're looking to see.
And so finally, what are you telling your clients right now, and where do you see the opportunities for investors?
At UBS Wealth, we've recently upgraded our views on global equities to positive, and we have a preference for the US, Japanese, and emerging market equities. As far as the ASX is concerned, we're broadly neutral. We see the scope for positive returns, but a little bit more constrained than those other markets due to lower rates of earnings growth, and valuations are reasonably elevated historically. We like gold and gold miners for diversification, and also in relation to corporate bonds, we like those to lock in higher yields in a falling cash rate environment.
That is Mike Jenneke there from UBS, and he wraps up the podcast for this Tuesday. Don't forget, if you enjoy it, to give it a rating or review on Apple Podcasts and Spotify. Click that subscribe button. Tomorrow, in focus with those CPI numbers, it'll dictate what the Reserve Bank will do with interest rates come Melbourne Cup Day. All the details then. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.